In the shadows of our economic system, far from the glitz of Wall Street and the halls of political power, lies a story that's been quietly tucked away for over a century. A story that reveals who truly holds the purse strings in America. This is the money trail. The year was 1913, an era marked by rampant financial panics, economic inequality, and a nation divided along class lines. It was against this backdrop that the Federal Reserve System was born, a central banking system designed to bring stability to our tumultuous economy. But at what cost? And more importantly, who really profits? The creation of the Fed was no accident. Powerful bankers and politicians had long sought a way to stabilize the booms and busts that plagued American finance. After all, when banks fail, it's the average citizen who suffers. But as we'll see, the solution they devised came with strings attached. On December 23rd of that fateful year, President Woodrow Wilson signed the Federal Reserve Act into law, creating a complex network of regional banks overseen by a 7-member board appointed by the President and confirmed by the Senate. The stated goal, to provide a safer, more flexible, and stable monetary and financial system. But here's where things get interesting. You might think that such an important institution would be directly accountable to the American people or their elected representatives. Think again. The Federal Reserve is an independent entity, insulated from direct political control. Its decisions on interest rates, money supply, and credit conditions can shape our economy for better or worse, yet it remains largely shrouded in mystery. So why should you care? Because the Federal Reserve has immense power over our lives, influencing everything from job growth and inflation to the cost of your mortgage or college education. And while its actions are often cloaked in technical jargon and economic theory, make no mistake, real people and institutions profit handsomely from its operations. At the heart of the Federal Reserve System lies a complex structure designed to balance power and independence. It's a network that includes the Board of Governors, 12 regional banks, and thousands of member banks across the country. The Board of Governors, formerly known as the Federal Reserve Board, is a 7-member panel appointed by the President and confirmed by the Senate. They serve 14-year terms, ensuring stability and longevity in their decision-making. Based in Washington, D.C., they set monetary policy, regulate financial institutions, and oversee the overall functioning of the Federal Reserve System. Then there are the 12 regional banks, spread across the country from New York to San Francisco. These banks play a crucial role in implementing monetary policy decisions made by the Board of Governors. They do this primarily through open market operations, buying and selling government securities to control the money supply. The size and influence of these regional banks can vary greatly. For instance, the Federal Reserve Bank of New York holds the largest share of assets and is often considered the most influential, due in part to its proximity to Wall Street. But who really profits from all this? Well, one group that certainly benefits are the member banks themselves. By law, these institutions must hold a percentage of their deposits as reserves with the Federal Reserve. In return, they receive interest on these reserves. This may not sound like much, but when you're talking about trillions of dollars in deposits, even a small interest rate can add up to substantial profits. Moreover, when the Fed engages in quantitative easing, purchasing vast amounts of financial assets to stimulate the economy, it effectively injects billions of fresh capital into the banking system. A significant portion of this new wealth flows directly to large commercial banks and investment firms, who are among the biggest sellers of these securities. So while the Federal Reserve's primary goal may be maintaining economic stability, there's no denying that certain players reap considerable financial rewards along the way.